Time now to talk winners and losers on Wall Street. We've got financial expert Rob Black joining us this morning, Rob, on a day where we saw some pretty heavy losses earlier this morning. The Dow was off by more than 1,000 points at one point. The NASDAQ was down by more than 500. Some of those losses are coming, are lessening a little bit. Some bargain hunters, I guess, are jumping in there. But, yeah, your take this morning as we're looking at this.
It's not great. We've been through Gulf War I and Gulf War II. The markets is now seeing the energy markets disrupted again, up 6% oil yesterday, up 7 to 8% today. So we're worried about inflation. We use oil to manufacture everything. We use it to heat our homes, to make gasoline so we can drive. So we're looking at, if those prices on the market are up, they're eventually going to be passed on to us, creating inflation. That's the worry. It's always going to be the worry of how long does this last. I didn't think Russia and Ukraine would be going on 4 years. So I think some people on Wall Street are probably going, is this going to be different because we're using more drones and less humans, either flying planes or on the ground? So we don't have questions for that right now. So we're not far from our all-time highs. We're still off about 2% for the year on the NASDAQ and the S&P 500. So that's not that bad. It's really quite normal. I could see us going down 5 to 10%, 15% in probably a month-long prolonged fight.
Wow. And of course, we here in California are particularly sensitive to oil price fluctuations on the global front. Our gas is already highest in the nation. It's tough.
Yeah, and the gas prices this is a bad time for a war. I know that sounds pretty odd, but the Middle East energy shock is adding to California drivers' woes. So we're at that time of the year where we're starting to create this summer blend in the last month. So you already saw prices jump 10 cents to 30 cents, 20 cents to 30 cents, depending on where you are in the parts of California. So the average gallon is about $4.66. I would expect to see another 10 to 30 cents on the price of that by the end of the week as gas stations adjust to future market supply. So we're looking at over $5. And I don't know, James, it's an awful time to say this, but it's going to get worse because April 2026, we're shutting down the Valero Benicia refinery in California, and that produces about 12% of the gasoline in California. So there's some real questions about this summer. What are we going to do for gas prices? And supply of gas may even be a problem.
Yeah, no kidding. All right, well, we'll have to wait and see where that goes. We're also, of course, tracking Bay Area home prices, another big topic. And I don't know, it sounds like great news for home owners that home prices continue to be just super high in terms of home valuations. But I feel like it's getting to the point where fewer and fewer people are just even able to afford it. So even if you want to sell your home, I don't know. It's tough. Yeah, it's tough to buy.
I saw a statistic that says this just beautifully. 1 in 5 homes in California is now done the transaction through an inheritance. So mom and dad are dying, kids are moving in. I see that in my neighborhood that I live in. So we got limited inventory in California. We have high valuations. The buy and sell model, it's very traditional. It's changing a little bit because of those inheritances. It's such a big number. In the Bay Area, in the 9 counties, the average home is about 1.13 million now. In San Mateo, it's over 2 million. And if you go for Contra Costa, that's 810,000. Although I don't see a lot of markets in a lot of houses in Contra Costa going for 810,000. Solano is the cheap place. You can get a home for 580,000. What jobs are out in Solano though? So it's called a landed class now because if your parents owned a home, you might very well inherit it in California.
Wow. Well, let's talk quickly about the job market. Here's a statistic for you. 43% of workers want to change careers this year, but you don't think many of them actually are going to pull that trigger?
No, we see the statistics every year, and some years it's as high as 3% when we had a lot of people quit during COVID. But this year it might be 2%, and yet 43%, that's a big number because I think AI is changing things. You pick a trade, you work really hard, you follow the career path up, but that doesn't seem to be working anymore, or not quite as well for younger Americans.
Wow. All right. Well, I feel like we didn't leave people with very great feeling news today, but hey, you know, we can't pick how the world is at the moment. We just have to analyze it each day that we wake up. Rob, appreciate it.
I'll do puppies tomorrow.
You we'll leave people with a smile. Rob, thank you so much. If you've got a story suggestion, actually, let Rob know if there's a company or something you want him to explore. Reach out to him, rob@robblack.com. We'll talk about it right here on the Crawford Morning News.